Morning Star. The Morning Star is a three-candle pattern that signals a potential reversal from a bearish trend to a bullish one. On the chart, we can see a strong bearish candle that shows clear selling pressure. Then a small-bodied candle which can be either bullish or bearish, reflecting hesitation and market indecision. Finally, a strong bullish candle that closes above the midpoint of the first candle, confirming that buyers are stepping in and momentum is starting to shift. The best time frames for identifying this pattern are the daily and weekly charts. Tweezer Top. The Tweezer Top is a two-candle pattern that signals a potential reversal from a bullish trend to a bearish one. On the chart, we can see two candles. The first candle is bullish, showing strong buying pressure. The second candle is bearish, and its high matches the high of the first candle. What makes this pattern important is the fact that both candles reject the same level. This shows that buyers failed to push price higher, increasing the probability of a bearish reversal. This pattern works well across all time frames. Piercing Line. The piercing line is a two-candle pattern that signals a potential bearish to bullish trend reversal. On the chart, we can see a strong bearish candle that reflects heavy selling pressure. It is followed by a bullish candle that opens below the previous close but then pushes higher and closes above the midpoint of the first candle. What makes this pattern significant is the strong recovery shown by the second candle. It suggests that sellers were in control at first, but buyers stepped in aggressively and began shifting momentum to the upside. The best time frames for identifying this pattern are the 4-hour and daily charts. Bullish Engulfing. Bullish Engulfing is a two-candle reversal pattern that points to a shift from bearish to bullish momentum. On the chart, we can see a small bearish candle, showing that sellers are still in control. It is followed by a larger bullish candle whose body completely engulfs the body of the first candle. What makes this pattern important is the clear shift in momentum. It shows that buying pressure has overtaken selling pressure, increasing the probability of an upward move. The best time frames for identifying this pattern are the 4-hour and daily charts. Bullish Harami. Bullish Harami is a two-candle reversal pattern that suggests momentum may shift from bearish to bullish. On the chart, we can see a strong bearish candle that reflects clear downward pressure. It is followed by a smaller bullish candle whose body remains completely within the body of the first candle. It suggests that sellers are starting to weaken, increasing the probability of a bullish reversal. The best time frames for identifying this pattern are the 1-hour and 4-hour charts. Rising 3 Methods. Rising 3 Methods is a 5-candle continuation pattern that signals the uptrend is likely to continue. On the chart, we can see a strong bullish candle that confirms buyers are in control. It is followed by 3 small bearish candles that stay within the range of the first candle, showing a temporary pullback rather than a full reversal. The pattern is completed by another strong bullish candle that breaks above the high of the first candle and confirms that buyers have taken control again. This pattern suggests a short pause in the trend, followed by a continuation to the upside. The best time frames for identifying this pattern are the 4-hour and daily charts. Evening Star. The Evening Star is a 3-candle pattern that signals a potential reversal from a bullish trend to a bearish one. On the chart, we can see, first, a strong bullish candle that shows buyers are in control. Then, a small-bodied candle which can be either bullish or bearish, signaling indecision and a possible slowdown in momentum. Finally, a strong bearish candle that closes below the midpoint of the first candle, confirming that sellers are taking control and the market may be ready to reverse lower. The best time frames for identifying this pattern are the daily and weekly charts. Tweezer Bottom. The Tweezer Bottom is a 2-candle pattern that signals a potential reversal from a bearish trend to a bullish one. On the chart, we can see 2 candles. The first candle is bearish, showing strong selling pressure. The second candle is bullish, and its low matches the low of the first candle. What makes this pattern important is the fact that both candles reject the same level. This shows that sellers failed to push price lower, increasing the probability of a bullish reversal. You can identify this pattern on any time frame. Hanging Man. The Hanging Man is a single-candle pattern that signals a potential reversal from a bullish trend to a bearish one. On the chart, we can see a candle with a small body near the top and a long, lower wick. This shows that sellers managed to push price sharply lower during the session, even though buyers were able to bring it back up before the close. It suggests that bullish momentum may be weakening, increasing the probability of a bearish reversal. You can identify this pattern on any time frame. Bearish Engulfing. Bearish Engulfing is a 2-candle reversal pattern that points to a shift from bullish to bearish momentum. On the chart, we can see a small, bullish candle, showing that buyers are still in control. It is followed by a larger bearish candle whose body completely engulfs the body of the first candle. What makes this pattern important is the clear shift in momentum. It shows that selling pressure has overtaken buying pressure, increasing the probability of a downward move. The best time frames for identifying this pattern are the 4-hour and daily charts. Bearish Harami. Bearish Harami is a 2-candle reversal pattern that suggests momentum may shift from bullish to bearish. On the chart, we can see a strong bullish candle that reflects clear upward pressure. It is followed by a smaller bearish candle whose body remains completely within the body of the first candle. It suggests that buyers are starting to lose strength, increasing the probability of a bearish reversal. The best timeframes for identifying this pattern are the 1-hour and 4-hour charts. Falling 3 methods. Falling 3 methods is a 5-candle continuation pattern that signals the downtrend is likely to continue. On the chart, we can see a strong bearish candle that confirms sellers are in control. It is followed by 3 small bullish candles that stay within the range of the first candle, showing a temporary pullback rather than a full reversal. The pattern is completed by another strong bearish candle that breaks below the low of the first candle and confirms that sellers have taken control again. This pattern suggests a short pause in the trend, followed by a continuation to the downside. The best time frames for identifying this pattern are the 4-hour and daily charts. 3 white soldiers. The 3 white soldiers is a 3-candle reversal pattern that signals a potential shift from a downtrend to an uptrend. On the chart, we can see 3 strong bullish candles closing progressively higher, reflecting steady buying pressure. These candles usually have small or no upper wicks, showing that buyers remained in control throughout each session. It suggests that bullish momentum is strengthening and that buyers may be taking control after a period of selling pressure. The best time frames for identifying this pattern are the 4-hour and daily charts. Hammer. The hammer is a single candle reversal pattern that signals a potential shift from a downtrend to an uptrend. On the chart, we can see a candle with a small body near the top and a long lower wick. This shows that sellers pushed price sharply lower during the session, but buyers stepped in and drove it back up before the close. It suggests that bearish momentum may be weakening, increasing the probability of a bullish reversal. You can identify this pattern on any time frame. Inverted hammer. The inverted hammer is a single candle reversal pattern that signals a potential shift from a downtrend to an uptrend. On the chart, we can see a candle with a small body near the bottom and a long upper wick. This shows that buyers managed to push price higher during the session, but sellers brought it back down before the close. It suggests that buying interest is starting to appear, increasing the probability of a bullish reversal. You can identify this pattern on any time frame. Spinning top. The spinning top is a single candle pattern that reflects market indecision with neither buyers nor sellers in clear control. On the chart, we can see a small body with both an upper and lower wick of similar size. This shows that price moved in both directions during the session but closed near the opening level as neither side was able to take control. It suggests a pause in the current trend and may also signal a possible reversal. The best time frames for identifying this pattern are the 4-hour and daily charts. Shooting star. The shooting star is a single candle reversal pattern that signals a potential shift from a bullish trend to a bearish one. On the chart, we can see a candle with a small body near the bottom, a long upper wick, and little to no lower wick. This shows that buyers pushed price higher during the session, but sellers stepped in and forced it back down before the close. It suggests that bullish momentum may be weakening, increasing the probability of a bearish reversal. You can identify this pattern on any time frame. 3 inside up. The 3 inside up is a 3-candle reversal pattern that signals a potential shift from a bearish trend to a bullish one. On the chart, we can see a strong bearish candle that continues the existing downtrend. It is followed by a smaller bullish candle whose body remains within the body of the first candle, showing that selling momentum is starting to weaken. The pattern is confirmed by a 3rd bullish candle that closes above the high of the first candle, signaling that buyers are taking control. It suggests that bearish pressure is fading and that the market may be preparing for a move higher. The best time frames for identifying this pattern are the 4-hour and daily charts. 3 black crows. The 3 black crows is a 3-candle reversal pattern that signals a potential shift from an uptrend to a downtrend. On the chart, we can see 3 strong bearish candles closing progressively lower, reflecting steady selling pressure. These candles usually have small or no lower wicks, showing that sellers remained in control throughout each session. It suggests that bearish momentum is strengthening and that sellers may be taking control after a period of buying pressure. The best time frames for identifying this pattern are the 4-hour and daily charts. Dragonfly Doji. The Dragonfly Doji is a single candle pattern that signals a potential reversal from a bearish trend to a bullish one. On the chart, we can see a candle with little to no body, a long lower wick, and no upper wick. This shows that sellers pushed price sharply lower during the session, but buyers stepped in and drove it back up to the opening level by the close. It suggests that bearish pressure was rejected, increasing the probability of a reversal in the opposite direction. You can identify this pattern on any time frame. Gravestone Doji. The Gravestone Doji is a single candle pattern that signals a potential reversal from a bullish trend to a bearish one. On the chart, we can see a candle with little to no body, a long upper wick, and no lower wick. This shows that buyers pushed price sharply higher during the session, but sellers stepped in and forced it back down to the opening level by the close. It suggests that bullish pressure was rejected, increasing the probability of a reversal in the opposite direction. You can identify this pattern on any time frame. Long-legged Doji. The long-legged Doji is a single candle pattern that reflects high volatility with neither buyers nor sellers able to take control. On the chart, we can see a candle with a tiny body and long, equal upper and lower wicks. This shows that price moved sharply in both directions during the session, but closed close to where it opened, highlighting a strong battle between buyers and sellers. It suggests that the current trend may be losing momentum and can often signal either a reversal or a period of consolidation. The best time frames for identifying this pattern are the 4-hour and daily charts. Marubozu. The Marubozu is a single candle pattern that reflects strong momentum and shows clear control by one side of the market. On the chart, we can see a candle with a full body and little to no upper or lower wick. A bullish Marubozu shows strong buying pressure, where price moves upward with almost no resistance from sellers. A bearish Marubozu shows strong selling pressure, where price moves downward with almost no resistance from buyers. You can identify this pattern on any time frame. 3 inside down. The 3 inside down is a 3-candle reversal pattern that signals a potential shift from a bullish trend to a bearish one. On the chart, we can see a strong bullish candle that continues the existing uptrend. It is followed by a smaller bearish candle whose body remains within the body of the first candle, showing that buying momentum is starting to weaken. The pattern is confirmed by a third bearish candle that closes below the low of the first candle, signaling that sellers are taking control. It suggests that bullish pressure is fading and that the market may be preparing for a move lower. The best time frames for identifying this pattern are the 4-hour and daily charts.